Where I want to start today, before we get into the markets and stocks, I would be weird if I didn't talk about this because I haven't actually talked about it. The moves came out that Warren Buffett did, right? It came out yesterday, all the detail around the moves he made. There was only two significant moves, in my personal opinion, that are worth talking about, okay? One is Apple. The other is Ulta Beauty. These are the only two, in my personal opinion, worth talking about. What's my opinion in regards to Apple sell? What's the reality? Like, why did he actually sell Apple stock? My personal opinion is there's two core reasons why he sold Apple stock, okay? Let's actually say there's three reasons why he sold Apple stock. And the third one's the biggest, in my opinion. So reason number one is the valuation's gotten pretty high for Apple. If you remember when Warren Buffett started buying Apple stock many years ago, back then, I remember forward P's, trailing 12-month P's being kind of in the 12 to 15 range for this stock. And now we're about double up that. So now that Apple has this forward P of 30 plus on it, right now it's about 32, 33, right? You're in a situation where the expectations for the company are a lot higher. When you trade at a 12 forward P, the expectations are pretty darn low. When you trade at a 32 or a 33 forward P, now your expectations are like way up there, right? So Apple has to come in with great numbers, basically year in and year out moving forward to continue to justify this valuation. So the expectation's higher, right? That leads us into point number two, I believe he sold, is the revenue's been very troublesome lately. I don't think he likes how volatile the revenue has really been. I mean, this company, if you go back a few years ago, very strong revenue growth. And here recently, I mean, we've had quarters recently where Apple's revenues are negative. That's not good, right? Like that's for Warren Buffett, he likes consistent revenue growers that doesn't matter the dynamic that's going on out there, they're going to grow, they're going to grow, they're going to grow. Apple's lost that now at this point in time, right? The third reason I believe he sold is much more significant. So guess what happened back in March? Back in March, the Justice Department sued Apple for monopolizing smartphone markets. Now, if you want to read it, the details around that, it's very significant. So the new quarter starts after March, right? April, May, June. And that's when Warren Buffett sold heavily. My opinion is between the valuation of Apple, the troublesome growth numbers recently, and then he's very well versed on these sorts of situations. He might have a feeling that the Justice Department actually has a strong case against Apple, and they might actually be able to change a lot of things in regards to Apple's business model, which could very negatively affect Apple's net income and Apple's revenue. Which, when you're trading at let's say a forward PE of 33, right? And all of a sudden you get hit with the Justice Department, if his opinion is that they've got an actual good case here, we could be talking about a stock that you could sell down significantly, and that sell down could happen over a period of several years, right? And then it takes several years to get back to where it used to be. So let's say Apple's at, a 3-point-something trillion dollar market cap right now, right? 3.4. If the Justice Department has something here, who's to say it couldn't sell down to a 2.4 trillion or $2 trillion market cap over a 1 to 2 year span, right? Then Apple needs to crawl back, so you could be with dead money in the stock for 5 years or so, right? That's something to take into account, and I believe that's one of the reasons he ended up selling a ridiculous amount. It wasn't like it was a little sell. And I told you guys, I think he's going to, part with a lot of shares, and sure enough, he ended up doing that, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are three main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head. and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there.
Now, in regards to these stocks, I want to talk about these 6 stocks specific in this video, where these stocks are headed now, what's going on with them: PayPal, Nvidia, Palantir, Fubo, Shopify, and the plan. Okay, let's talk PayPal first and foremost. There's huge things going on with PayPal right now. Okay, so in regards to PayPal, it's starting to work out for us a little bit here. It's still a huge lagger for me overall. I mean, it's less than a 6% gain, but we're up $11,000, so we're moving in the right direction. Stock closed today $66 plus. But this chart is everything. Look at this. This is a 1-month chart, and we have insanely bullish activity going on for PayPal. Okay, insanely bullish. So in the past month, PayPal stock is up 10%, while the Russell 2000 is down 4% and the NASDAQ's down 7%. This is incredibly bullish. I mean, incredibly bullish for PayPal, because what we're looking at now in this situation is a situation where essentially the market's even going down, and even though the market's going down, PayPal's still going up. Now imagine if the NASDAQ comes back, the Russell comes back over this next few weeks or whatever, right? Which, keep in mind, we're in August right now, and then we're going to go into September. August, September are bad months for the market, so we could easily lose gains and go back down in regards to the indexes. But let's imagine a situation where over the next few weeks, NASDAQ comes rolling back, right? NVIDIA's earnings are great. Oh, the demise of NVIDIA was overblown. Okay. Next thing you know, NASDAQ's rolling. We get that 7% up. Do you know how much PayPal's going to be up in that situation? You'll see PayPal go to the 70s or 80s quickly in that sort of situation, like quickly. And keep in mind, the more momentum that comes into PayPal, the more it attracts more momentum traders, more swing investors, those sorts of folks as well. So it's kind of, the rich getting richer situation. So what we're seeing play out in PayPal is, I think, kind of like best case scenario in regards to stock price, right? And now that we have the fundamentals all going in a great direction again, it just kind of puts a cherry on top in regards to the situation. So basically, PayPal's emerging as kind of like an overweight stock. So it's going to do much better than whatever the market does. And so if the NASDAQ goes up 7% over the next few weeks, don't be surprised if PayPal's up 15, 20, 25% over that span. So this is really, really bullish for PayPal. I'm very happy to see things starting to trend in the right direction, not just in regards to the fundamentals, but the stock price, because I have my position built in PayPal. I'm ready to roll, baby. Like, PayPal, you have my full permission to go to 70s, 80s, get back to 100, go to 120 over this next year. You have my full permission now at this point in time. That leads us to Palantir. My gosh, Palantir. What an animal. Look at this. The stock closed here today, $31. We're now up 250% on this position. It's starting to become one of our best stocks in the public count. It is tremendous, right? Now, the thing you got to understand about Palantir is this stock it doesn't care about short-term valuation metrics anymore. It's thrown that out the window. Forward PEs, 2-year out forward PEs, trailing 12-month PEs, it all doesn't matter anymore for the short term. And the reason being is what's going on with the revenue. The company keeps coming in and beating revenue estimates by considerable margins. And so, we look at like 1000xstocks.com here. We take obviously what analysts are kind of thinking consensus. But here's the thing. Analysts have been wrong on this stock, right? And so who's going to say they're going to all of a sudden be right? There's a decent probability these numbers are far too low that analysts have here, right? Which means there's much more upside. And the game of Wall Street gets a lot more fun in regards to Palantir. I ran some projections here on 1000x with our new fancy tool with the valuation metrics where you can choose P ratios to have the stock at, right? Different growth rates and things like that, right? If you have Palantir doing around $9 billion of revenue in 2028, right? Which, with how much they're starting to beat these revenue estimates and the fact that they have all this AIP growth and things are just getting more and more exciting, it's looking more and more probable. By the way, I apologize if everybody thinks their ring ding's going off, okay? But with everything that's going on with Palantir's business model, now they get the partnership with Microsoft. Who knows where this revenue is going now at this point in time, right? Net income should go up at a much faster clip than revenue. So if revenue's up, let's say it goes up 30% on average over the next few years, like net income should blow that number out of the water because this company just flipped to profitability here recently. So I kind of ran them at like a $9 billion run rate for revenue in 2028 with about $2.9 billion of net income, which will put the net income margins at about 32%, which is not a crazy number for a stock with this sort of business model that's kind of like more SaaS related. Right? And if the company's growing at these sorts of growth rates, you're going to command a still an insanely high P ratio. You're not going to command a 15, 20, 25 P ratio on a stock like this that has this sort of growth, that has this sort of sticky of a business model. This is like creme de la creme. So you're going to command probably a 50 to 90, right? Which puts the stock between like a $67 and $120 price. That's the thing with Palantir right now is, where's the growth? Like it's so much growth and numbers are coming in so strong, it's become imagination stock now. And this might have like a negative kind of sentiment around it, like an imagination stock. But the reason it has imagination stock is because of this, what I'm showing you right here. Look at this. So if we go back 4 quarters ago, they beat by $2 million. Then they beat by $5 million. Then they beat by $16 million. And then this latest quarter, they beat by $25 million. So what's next quarter? Are they going to beat by $30 million? Are they going to beat by $40 million? Are they going to beat by $50 million, what analysts are expecting? We don't know, right? But the trend is so much your friend in this situation that we have a situation where it's just your imagination can run with it at this point in time. And that's where Palantir is at. So to try to put a top on where the stock price is going to go in the short term meaning the next year, is impossible. It's absolutely impossible because we don't know where revenue growth rates are going to top at. We don't know if we're going back to 30%. Remember, revenue growth this last quarter was 27%. What if we go back to 30%? What if we go to 35%? What if we go to 40%? We don't know, right? And keep in mind, this isn't even like an insanely strong time from a business sentiment standpoint, and Palantir is putting up these sorts of numbers. What happens if, dare I say, right? Everybody's kind of banking on recession over the next couple of years. What happens if the business environment actually gets better over the next few years? Ooh, what happens in that situation? Does Palantir go to a 40% growth rate on the top line? Do they go to a 50%? We don't know. I mean, with Palantir putting up this strong in numbers in this bad of an environment, that's pretty darn incredible. Look at a lot of the SaaS-related companies. Look at how bad their numbers have been for the last couple of years. And then you got Palantir growing revenues last quarter 27%. It's an imagination stock now at this point in time. Nvidia. So, as I tell you guys with Nvidia, they still want it bad. Now, who's they? They is Wall Street. And I tell you guys, they want this stock bad still. They act like they don't want it, right? They act like this excuse, that excuse, blah, blah, blah. At the end of the day, they all want to be in this stock. And you look at the 5-day chart on the stock, right? 16% the stock has gone up just in the past 5 days again. They buy it up every time. Every time you see Nvidia stock dip, really for almost 2 years now, there's Wall Street to buy it up and buy it up, buy it up for almost 2 years straight now, right? They have to own this stock. They want to own this stock. And the reason being, to stick up for a moment, the Wall Streeters, is where, remember, Wall Streeters, they like to play a lot of large cap stocks, the mega cap stocks, because they see those as not as risky as playing like small caps or something like that, right? So in mega cap, where are you going to get these growth rates? Where are you going to get trailing 12-month EPS growth of 700%? And current year expected earnings per share growth of 222%. And next year earnings per share growth of 38%. And where are you getting revenue growth of 100+% in mega cap? And where are you getting gross margins of 78% and net margins of 50+%? Remember, Wall Street cares the most about two things: revenue growth and margin growth, right? Wall Street loves companies that have incredible margins, and they love companies that have incredible growth. And so where else are you getting this? This is why these Wall Streeters buy up every dip in this stock. And until you get this company's margins to break, or until you get this company's revenue growth story to break, they will buy every last dip in the stock until that break happens in the business model. When does that happen? I don't know. Probably not this year, maybe next year, maybe 2026, something like that, right? So if we compare them versus Apple, compare them against Microsoft, right? I mean, it's a night and day difference. Look at Nvidia's growth rates and expected growth rates versus Microsoft, versus Apple. Look at the revenue growth rates of Microsoft and Apple expected versus Nvidia. Look at Microsoft's gross margins and net margins. Look at Apple's gross margins and net margins versus Nvidia. And so if you wonder, why are these Wall Streeters willing to buy every single dip in sight? It's because of that. It's because of that. It's not just, oh, it's hype. It's not just like, oh, it's the exciting stock to be in at the moment. It's because the growth rates. It's because the margins. It's because at the end of the day, you can't find that anywhere else in mega cap tech. Anywhere else. I could compare them with Tesla. I could compare them with my lovely Amazon, right? Those are two stocks I own. They're on a whole different stratosphere. Nvidia is versus Tesla versus Amazon. I have to admit it, right? And I own Nvidia stock as well, but it's not as big a position for me as Tesla and Amazon, right? Compare them against my lovely Meta, my biggest position in the public account. Nvidia smashes them. They smash them, right? Compare them versus Google. They smash Google McDougal. Look at the margins, right? Look at the net margins of Nvidia versus the other companies. This, folks, is why these Wall Streeters will continue to buy this one until the growth story breaks. So, for now, it's up and away for Nvidia. And as I said, don't be surprised if you see the stock with a 150 in front of it. Don't be surprised if you see it with a 200 in front of it. The sentiment on this baby changes quick. All of a sudden, everybody gets scared, worried, right? And then all of a sudden, you get closer to earnings. Everybody starts getting a little more excited about, oh, maybe there's something here with Nvidia, right? Then Nvidia comes out, they smash it. Great conference call. Pew! Rocket ship ride up again, right? Then a little after that, oh, maybe demand's going to break here in Nvidia. Oh, maybe the customers aren't going to be ordering as much, right? And next thing you know, stock goes down a bit. Wall Street buys it right up. Next earnings come, flies again. So it's going to remain that way until the growth story breaks in that one, the margin story. Fubo, next up here. This is a stock that has treated me very badly, right? Down 18K on this stock. It has treated me horrible. So Fubo has a huge situation going on right now, right? They have a lawsuit, a massive lawsuit against Disney, Fox, and Warner Brothers right now, going on at the big court in New York City. And no one can talk about it. No one can talk about it. It is the most hush-hush major lawsuit situation I've probably ever seen in my life. So why is everybody being so hush? Why is CNN not covering this? Why is Fox News not covering this? Why is MSNBC not covering this, right? Where's all these big major publications to cover one of the biggest lawsuits in regards to the TV streaming era we've ever seen? Well, think about it for a moment. Who's Fubo going after? They're going after Disney, which owns ESPN, right, and a bunch of other networks. They're going after Warner Brothers, right, and we know who they own. They're going after Fox. We know who they own. So if you're wondering why everybody's so hush-hush about this, because no one wants anybody to know about this. No one wants anybody to know about this because it messes with their money. All the mainstream media's money, right? So that's why if you type in Fubo TV and you look news, it's like, where's the talk here about this massive lawsuit going on in New York City right now, right? So you know where I have to go to find news about it? I have to go to some weird, obscure websites like Front Office Sports. That's who I have to go to for this major lawsuit. It's incredible. I mean, what a cover-up story this is. So Venue, that's the potential streaming new partnership these companies are having, which is, a lot of people are considering it's more monopoly type practice here. Venue, Fubo TV, both say judge has power to kill their business. A judge declined to decide, this was yesterday, this came out, a judge declined to decide yet on an injunction to stop Venue from launching. Fubo TV's counsel told the judge that the company will run out of money by early 2025 if Venue is allowed to launch. By the way, I'm not so convinced of that, but anyways. At the close of a 4.5-day hearing Monday, a federal judge declined. A federal judge, right? This isn't some small stuff going on here. This is huge. A federal judge declined to announce her decision on whether to grant an injunction. Fubo TV seeks to stop Venue Sports from launching. Venue, the much anticipated live sports TV offering that will boast 14 channels from Disney, Fox, Warner Brothers, all the ones that are trying to keep this situation hush-hush, aims to launch August 23rd, according to a claim made by the courtroom. Tom Schultz, a lawyer for Fubo. Venue declined to comment on a specific date. The judge said she would be mindful of the calendar. I am very mindful the parties need certainty. While Garrett is not obligated to rule on anyone's timeline, that comment sounds more like we'll know within 10 days if venue will be permitted to launch or blocked by Fubo. Fubo, arguing that venue would violate antitrust law, sued the three media giants weeks after their February 6 announcement unveiling plans for the app. Fubo's core gripe is the three media companies refuse to license out their sports channels to distributors like Fubo, but will do so for venue. That dynamic will spark a wave of cord cutting at pay TV distributors, Fubo argues, by sports fans in favor of a lower priced venue. And here's the deal, okay? These guys have the big sports rights, right? Fox, ESPN, which is owned by Disney, obviously, right? Warner Brothers Discovery, they have the major sports rights. And so basically they want to create this in-between service, right? Where they're all going to benefit from this. And maybe they charge a cheaper price at first and they're able to go up a bunch on that price as time ticks on, right? Which is kind of an ugly situation because if you eliminate basically all competition, then you can just go up on price and up on price because you kind of have a monopoly on the sports rights. So then if you want to watch, I don't know, some big football game or basketball game or baseball game or whatever, right? You have to go through their service, which is then kind of like a monopoly type practice because then no one else has the access to that, right? Shopify. So a few months ago, I came out with a video, buy Shopify and don't stop, right? This is just a stock I view as a great buying opportunity. You know, every dip you get this year for Shopify, I think is a phenomenal buying opportunity. This is a stock that's been anywhere else between $40-something this year and like, I don't know, $70 roughly, right? Check this out. This is just in the past 8 trading days. Shopify has gone up 41% in 8 trading days, right? And I mean, imagine, this is an even bigger point than Shopify. This is why you take an advantage of massive crashes in the market. Drama in the market is such an advantage. Like, people fear drama in the market. They fear big drops in the market. Never fear it. Welcome it. Because let's say you were buying Shopify Monday morning, like I was, right? Guess what? You're already up 40% plus in that position. And guess what? That's in 8 days. People hope to make 41% over several years. And you made 40+% in 8 trading days? In holding a great stock? It's not like Shopify some, speculative, like, oh boy, Shopify, that's a very speculative stock. Like, it's not Fubo, okay? It's not like there's a lawsuit that might make or break that company. Like Shopify, you feel very confident buying that. And you're already up 40+% in 8 days? Don't fear market drama. Appreciate it. Take advantage of those deals. It very rarely happens. But when you get that opportunity, you could make literally the amount of gains in days that people hope to make over years of being in, let's say, an S&P 500 index fund or something like that. It's unbelievable.